Hi guys, thanks for joining me. Right, what we're going to go through today is we're going to go through chock, which is change of character, and flip. Obviously, there's chock areas to enter and there's flip areas to it. The flip entry is the confirmation entry. So let's just say, obviously, if your daily's in a cell, overall cell, if you're 4 hours in a cell, then you want to be entering on the 15-minute, the 30-minute, or even the 1 minute. You want to be selling to give yourself the best chance. Obviously, when you start to know where the market's going to go, you can buy in a sell market or sell in a buy market. But to give yourself the best chance, especially while you're learning, if the overall sell, then don't be jumping in buys. Make sure it's selling in the 4 hour, the 15-minute, the 5 minute. Make sure you're giving yourself the best chance. So say the overall is we're selling. We've got a little bit of liquidity being took out there. And then we've got this big push down. The area you want to be, if we leave the arrow there, so we've left an extreme order block here. And if that's your if you refine it from your daily all the way to maybe a 5-minute order block, then that is your extreme order block. That's your supply area, extreme supply. So you kind of want to wait till it's near that area. If it's not near that area, turn your laptop off, turn the phone off, and just wait for an alert, or just check it every kind of couple of hours, depending what time frame you're on. So let's start with the chock. Once it's retraced back up, because obviously every impulse has a retracement, and the bigger chance of it selling off is when it starts to retrace slowly, and it can take 2 or 3 times the amount. It can take bloody 5-10 times the amount longer to retrace back to that one area, even if it pushed down in a day. So it can take a lot longer to get back to there. But when it's back to the extreme, you've got more chance of selling. So we're making higher highs, higher lows, higher highs, higher lows. And now your alarm's gone off. So you get to the computer, you see what's happening. You've dropped down to a smaller time frame. So say this is I trade the 4 hour and the 15 minutes. So that's an overall 4 hour supply area that has been refined to the 15-minute order block. So say that's your 15-minute order block, which it works for me. It might not work for you, but you've got to try these things out. So we're waiting for the chock, and the chock has happened as soon as the low that created the highs happened. So that technically, let me stop that there. So that technically, to everyone who understands the high lows and high highs, so there's a break of structure. Let's see, it's not going to be a quick way, but so you've got all these break of structures happening. So that you're in a mini uptrend, but you don't want to be buying, because obviously the overall is a sell bias. So you don't want to be entering for buys. Obviously, this last one, a lot of people get in at that, and it can shoot down from that. But sometimes it tickles your order block, makes the early smart money sell, and then it does a sweep, and then it sweeps the last bit of liquidity. Right, so I'll make this a bit clearer. But so as you can see here, where it swept in that one swift move, it's took the money, and now it's took the low money as well. So that is a break of structure. So that is technically your chock. But the only thing you've got to be careful of, now it took me a while to learn this, is that is liquidity, because that has not touched the extreme of this impulse. So what I've had personally, and you want to keep your eye on this because this does happen quite a lot, is it makes you think you've got your change of character, and then but really it's just tapping. It's created liquidity, so it's created some stop losses effectively, and then it flies through them stop losses. It then makes people think that it's selling, so people jump in for sales. Then it taps the demand, and then it buys again, and then it takes, more than likely, it takes your stop loss out. But for a true change of character, you want this demand area to be broken. Once that demand area is broken, so once it's took the liquidity and you find the extreme of the last impulse up that's kind of took the liquidity, and there's an order block here. As soon as it takes that to me becomes the breaker block. So that block has then broke, which means now we're in the sell. So what I'd do personally in the future is I'd find the little bit of liquidity that it's going to take out. It might not have any. More than likely, it will set it up. It will set a little bit of liquidity up then. But find the extreme order block from the last kind of impulse up. Drop your chalk line there, and just wait for it to break. If it doesn't break and it goes through, you've not entered. You've not lost anything here. So that's your chalk area. So a lot of people obviously, I'll tell you what I'm going to need here. 2 seconds. Let me get a couple of orders up, and then I can show you where you're going to enter on a chalk area. Right, let's get back on big screen. Right. So yeah, so you broke the last impulse up. You've broke it, yeah. You've took the liquidity, but you've actually broke through the demand area. So now, to me, that is, I've definitely got sells in my head now. So what you want to wait for is you want to wait for it to respond back, and you want it to tap in to the order block, the extreme order block of that last impulse down. So it's kind of, this is ideally what's going to happen, and then obviously we run away. So your chalk entry there, so that's broke the impulse up. So your order block, your supply block there is the major supply area that pushed through. That's the extreme that pushed through all of the money going up, pretty much. So that's your chalk entry there. So you can either just set a sell limit, or you can enter manually. Obviously, you can do this on a smaller time frame. So if this is on the 15-minute, you can drop down to the 1 minute and do the exact same thing. Wait for it to chalk, basically. Wait for it to change character on the 1 minute, and then you can wait for the retracement to 50% of the impulse, pretty much, especially on the 1 minute. It's normally around about 50%, and then you can jump in on a sell. So that is your chalk entry. Tell you what, we'll leave that there for a minute. So that's your chalk entry, and then the next entry, which is your confirmation entry. So if you're a bit worried about, if you think you've not covered the last impulse up, if you think that it might be tapping in to another area of demand, which, don't get me wrong, it can take these two as liquidity, but in a smaller time frame, it's good for confirmation, especially if it's already tapped in to the extreme order block. So your flip area now is when your next kind of impulse breaks through the chalks level. So that's your flip area. So once that has been broken, basically, once you've broke the low, that is the flip. So you want to be fair, another good thing here is you've normally got the extreme area here. Obviously, it's higher up. It's where the move started. Your extreme order block is where the move started. It's the last candle up. If you're in a sell, the order supply area is the last candle up, and the opposite for for the demand. So as you can see here, so it's shot down, but don't worry, because you know that at some point it needs to take this liquidity out. This here, that little area there is liquidity, and you know it's liquidity because above that, this area here, if there's imbalance where there's no wicks even tapped into this area, if this area is just pure candle, you know that's imbalance. So you know that this supply at some point will get tapped, and this is the flip entry. This is the confirmation entry. So you've tapped supply there, you've broke through the flip level, and then you're waiting to enter on the supply area from the flip, which will be a better confirmation than the chock entry, because you know it's confirmed that it's making lower lows and lower highs. So you can set your sell limit here. You can just cover the supply area. You can cover the high if you want, but I mean, look, it goes from 4.5 RR. I mean, look, you can triple it, if not more, yeah. 3 or 4 times it for the sake of that. And you know it's protected because these are all protected highs now because they've already been mitigated. So what I would personally wait for is obviously let it do its thing. It might tap into this demand area here, and it might have a bit of a response from that. Obviously, this is the extreme that broke this little high here. So what might happen is obviously we'll tap into that, and then we'll start retracing. And then once it's back to your extreme, it might make a double top here as well to make it look like a double top for the retail sellers. And more than likely, it'll tap in there and it'll shoot down, and then it will do the exact same thing, but then more than likely it'll fly down. So I know it's a bit messy. Hopefully you can kind of understand roughly that. I don't know why it's being awkward. Right, so let's just go over this. And obviously it will break this. If it's an overall sell bias, it might respond from this demand area, but it needs more orders to then power through it, if that makes sense. And it will break this low. If it is a sell bias overall, it will break the low. But you can always aim for the extreme order block demand here, just in case it responds. So, right, let's just go over this then. So, overall, if it sells, obviously the whole thing is opposite for buys. There's no point me doing another video for that. But yeah, if the overall sells like daily 4 hour or the 8 hour sells, you want to be entering sells. So you want to enter either on the 15 minute, the 1 minute, 30 minute, 5 minute, whatever you enter on, you need to see a chock or a flip before you enter. And that is confirmation. Obviously, you can put your sell limit on the 4 hour order block, but your SL, your stop loss might be like 40, 50 pips, which is personally quite a lot. Like I try and kind of my maximum is probably 10 or 20 pips, and that's a lot. Like I like 4 to 5 pip stop loss because it gives you more percent profit. So this is why you refine it. You refine it to the 15 minute, and then you can refine it to the 1 minute. You could do the flip entry, but then you could refine it to the 1 minute on the flip entry. And before you know it, your stop loss is 3 or 4 pips, but your TP might be 30%. So you're just getting yourself in the best position for more money, basically for more money. So let's just go through this. Higher highs, higher lows, higher highs, higher lows. We've had a push up there. We've just touched the order block. We've made early smart money sell. They start selling. They think they're in profit a little bit, which I've done myself. We create a bit of liquidity. It's not tapped into the demand area. So that's always a bit of a worry. Then we take the sweep out. So we then take the stop losses from above the early sellers. And then we smash through them. And if we don't respond from this extreme, this last kind of extreme area, if we break that, then that is the chop. That's the change of character. For me personally, other people might say different, but This is how I view it. So once that's broken, then for your confirmation entry, so some people enter on the supply on the order block that created the change of character, and there's nothing wrong with that. But if you're a bit cautious or you want to double check, you want to make sure it is actually selling and it's not tapped into another demand area, then you can wait for that impulse to then be broken. And once that gets broken again, then that's confirmation that it is actually selling. And then, yeah, you do its thing. It'll create liquidity there, and then it might create like a double top for the retail sellers. And then they think, oh, we can sell here. Nope, no chance. It will sell for probably one or two candles, and then it will shoot into your extreme flip area, your extreme flip, extreme order block. Sorry. So, and then you jump in on the supply. You can drop down to the 1 minute, the 2 minute, and then you can do the exact same again. Once your break of structure is confirmed, once you've broke the low that created the high, and you've broke the extreme demand area, especially for sales, then you can jump in. You can jump in and you can aim for the 4 hour or even the daily low if you want, and just ride the wave. Pretty much ride the wave. So yeah. So this entry here is the chalk entry, the change of character entry, and this area would be the flip entry. That's just got, obviously, if it does go in the way, you're going to get the extra little percentage because you've entered higher. But for confirmation, a lot of people enter on the flip area because then it removes more emotion and you can leave the trade running, and you know that everywhere's been mitigated. All the order blocks have been mitigated, and the only way it can go is down. Obviously, this is the market, so it might just give you the two fingers and it'll fly straight up. But based on the past and what I've learned, it will shoot down. So, but yeah, hopefully that helps. Let me know in the comments if it does, or what I can do to make the videos better or whatnot. But yeah, thanks for watching, and don't forget, like and subscribe, and follow me at the Rule of 7 on Instagram, and I'll see you all there.